So once again, very good evening, everyone, and welcome back to the session. So in the last sessions, we have discussed about all the areas of 50 bucks. And in addition to which, we have also practiced a question called Sunshine Hotel Group from the same area. So in this session, we will be focusing on the area of reporting. Especially, we will be focusing on the questions based on reporting, which includes matters to be considered in discussion with the management, matters to be considered in further action, matters to be considered and audit evidence, matters to be considered before accepting an engagement, and matters to be considered before accepting terms of an engagement. In addition to this part, we will also be going through the area of critical appraisal as well. So we will start with the area of critical appraisal first, and then we will move on to the other areas of the matters to be considered part. And we will do one question from each of these areas. In addition to this, we will also quickly brush through some of the questions to get a better understanding on these topics. Okay. So, well, in order to start with the area of critical appraisal or with the area of reporting, we need to have a good understanding about the standards, especially with regarding the area of reporting itself. So we will be going through the quick revision of the standards first, and then we will move on to the question. Okay. So basically, when it comes to the reporting part, well, we know that as an auditor, we might need to express, we definitely have to express an opinion on the company's financial statements. And normally as an auditor, we will be providing two sets of opinion, or either one opinion from these two set of categories. So basically the opinion together can be split into two heads, which include modified opinion, and which one is the other one?
Unmodified opinion.
Definitely unmodified opinion. Good. And this unmodified opinion will be further be considered as unqualified. And this modified opinion will be further be split into three heads called qualified, adverse, and disclaimer of opinion. Disclaimer of opinion. Good. And when it comes to unqualified opinion, it means that the financial statement shows a true and fair. When it comes to qualified opinion, it means that financial statements shows a true and fair view, but it is subject to some reservation. So except if some matters are avoided, so the financial shows true and fair view, that's a qualified opinion. When it comes to adverse opinion, it means that the financial statements does not show a true and fair view. And when it comes to disclaimer of opinion, it means that as an auditor, we are not able to express an opinion on the financial statements due to the lack of audit evidence. So as an auditor, we are not able to express an opinion on the financial statements due to the lack of audit evidence. That's something called disclaimer of opinion. And as we have studied earlier, as an auditor, before considering on which type of opinion need to be expressed on the company's financial statements, we need to consider whether an amount of mistake is material or not. And in order to consider the materiality, we will be considering the materiality benchmark, which is based on SOFP and SOPL. So which all were the benchmarks based on SOFP, as we discussed in the last day? So total asset and the net assets. Yeah. When it comes to SOPL, it includes revenue,
operating profit.
Not operating profit, it's a profit after tax. Okay, profit, and on the basis of the gross profit. And finally, we can also consider it on the basis of nature as well, considering related party transaction and going related matters. Okay, so I'm repeating the same thing again. Doesn't mean that nature means all about related party or going concern. These are the most commonly asked point in almost all the exam, but still on the basis of the nature of the company, there can be chances of having other related things also, which have to be considered as material. So on the basis of SOFP, what will be the lower limit? And before that, one more thing. When you consider reporting part materiality, you're only required to consider the lower limit of materiality, and upper limit is only required for the 50 marks question. So total assets ka 1%, net assets 2%, 0.5% of revenue, profits ka 5%, and gross profits again 0.5%. Yeah, good. So this is how we will be considering the materiality. And once the materiality is considered, in addition to the materiality, we should also be considering the pervasiveness. So, well, what do you mean by pervasive? It is nothing but it's a term which we use to show the impact of a particular mistake in the company's financial statements. And on the basis of the standards, we have studied that basically in 3 situations, we will be considering a mistake as pervasive. Consider that a mistake is affecting multiple elements of the financial statements. If a mistake affects the company's revenue as well as company's some other element, or if a mistake affects company's expenses and company's assets, it will be pervasive, but the impact have to be significant. That's the first one. Secondly, if there's a misstatement which is relating to a specific element in the financial statements, but substantial portion of that element is affected, then again that needs to be considered as pervasive. Say for example, only the inventory balance is affected, but 60% of the inventory is misstated. In that case, that's pervasive. And consider that if there's a mistake that is relating to fundamental accounting disclosure in the financial statements, then that should also be considered as material and pervasive. So on this regards, we will be considering a particular matter as pervasive. But it's a bit complex, so you're not required to consider that. Instead, you can do one thing. Say, consider the company is in profit. So you need to check whether the profit of the company is restated into loss if the amount of misstatement is adjusted, or if the amount of loss is restated into profit once the amount of misstatement is adjusted. If so, that should be considered as a pervasive mistake. Say, for example, consider the company is already in a profit of 1,000 and the company have not included an expense of 1,250. And if the expense is adjusted in the financial statements, company will result in a loss of 250. So the amount of loss is pervasive. Sorry, the amount of mistake of 1,250 is pervasive. Or consider the company is already in a loss of 3,500. Company have not adjusted an income which is around 4,000. And if this income is adjusted, the company will result in a loss of 500. Sorry, profit of 500. So in that case, the amount of misstatement will be pervasive. So same like this, if a mistake convert the reported losses into profit if that were actually adjusted, or if the loss is restated into profit after the adjustment of mistake, the amount of mistake have to be treated as pervasive. Is that clear, everyone?
Yes, sir.
Yeah. And on the basis of this, consider that there's a mistake in the company's financial statements. There's a misstatement in the company's financial statements. And if the misstatement is not material and not pervasive, what opinion we need to express? Unqualified opinion. If there's a mistake in the financial statements which is material and pervasive, what we need to do? We need to provide an adverse opinion. If there is a misstatement in the financial statements which is material but not pervasive, what we need to do?
Qualified
We need
opinion.
to provide a qualified opinion. Is that clear, everyone?
Yes, sir.
Okay.
Yes, sir.
Or consider that there's a lack of audit evidence, which means the company is stating that they have purchased an asset worth 20,000. However, they are not having any evidence to show that the asset is under the ownership of the company. In that case, there's a lack of audit evidence. If the lack of audit evidence is not material and not pervasive, then the amount of particular lack of audit evidence would result only in an unqualified opinion. We are not required to qualify the opinion. And if there is a lack of audit evidence which is material and pervasive, what we need to do? We need to provide a disclaimer of opinion. If the lack of audit evidence is material but not pervasive, in that case, we need to provide with a qualified opinion.
Qualified opinion.
Okay. So that's the conclusion. So if there is a misstatement which is not material and not pervasive, we'll provide with an unqualified opinion. If it's material and pervasive, we'll go for an adverse opinion. If it is material and not pervasive, we'll go for a qualified opinion. And in case of lack of audit evidence, if it is not material and not pervasive, we'll go on with unqualified. Lack of audit evidence is material and pervasive, we'll go on for a disclaimer of opinion. And lack of audit evidence is material, not pervasive, we'll provide qualified opinion. Is that clear, everyone? Okay. And in addition to this, we have studied the reporting relating to going concern as well. So, we have discussed about the going concern reporting. So basically, when it comes to going concern, we have studied the reporting related to going concern. Consider that if the going concern assumption of the company is appropriate, in that case, what will be the opinion? Definitely unmodified opinion. If nothing is wrong with the going concern assumption, definitely we can provide unmodified opinion. If the going concern assumption of the company is inappropriate, if it is not appropriate, what we need to give? We need to provide an adverse opinion, because matters relating to going concern will be material and pervasive. Then the going concern assumption is appropriate, but there's an uncertainty which is adequately disclosed. If the going concern assumption is appropriate and uncertainty is there, if that is adequately disclosed, we need to give an unmodified opinion. But in addition to the unmodified opinion, we should also provide material uncertainty relating to going concern paragraph. But on the other hand, if the going concern assumption is appropriate, but there's an uncertainty and the company have not disclosed it in the financial statements. Well, we know that there are two disclosures which we need to provide in relation to the going concern. One, we need to mention whether the company is in going concern. And in addition to which, we should also mention whether there is any uncertainty relating to going concern. Consider that only uncertainty is not disclosed. If the uncertainty is not disclosed, but disclosures relating to going concern is provided, in that case, we will be providing qualified opinion. If no disclosures in relation to going concern is given, then in case we will go for adverse opinion. Then if the management is unwilling to make the assessment, management is not willing to make the assessment, then we won't be able to conclude whether there is any misstatement or not. So we will provide disclaimer of opinion. If the management is not extending the assessment or not performing the assessment completely, then in that case, we need to provide with a qualified opinion. So these are the going concern reporting of which you should be having clear picture. So please do revise the area of going concern reporting as well. Then, in addition to this, we have studied multiple explanatory paragraphs. So which all are the explanatory paragraph which we have discussed about? There will be emphasis of matter paragraph. What else?
Other matter paragraph.
Other matter paragraph.
Key matter paragraph.
Key audit matter paragraph.
Uncertainty relating to going concern.
Material uncertainty relating to going concern paragraph. And finally,
Information paragraph.
other information paragraph. Exactly. So these are the paragraph about which we have properly learned about. So what do you mean by emphasis of matter paragraph? What's the purpose of providing emphasis of matter paragraph?
The matters which
Purpose
has
of
been
giving an emphasis of matter paragraph.
which has been properly presented, which need to be.
Yeah. Consider that there's something in the company's financial statements about which it is appropriately presented and disclosed. If something in the financial statements is appropriately presented and disclosed, and if the auditor need to emphasize on the same matter, he may use emphasis of matter paragraph. But you should always keep in mind, only those things that are appropriately presented and disclosed in the financial statements can be emphasized. First thing. Secondly, only those matters that are material should be included within any of this paragraph, especially in the emphasis of matter paragraph. When it comes to other matter paragraph, if there is something that is other than presented and disclosed in the financial statements, which the auditor need to communicate to the users about the current year audit, or about the auditor's responsibility, or about the auditor's report, he can use it within the other matter paragraph. So only about something about which the auditor need to communicate to the management, to the users, which is relating to the current year audit, regarding the auditor's responsibility, or regarding the auditor's current year audit, he may use other matter paragraph. When it comes to key audit matter paragraph, this paragraph will be specifically be used for a listed company. And the key audit matter paragraph is used for the purpose of communicating to the users about the selected matters that we have already communicated to those charged with governance. Well, we know that during the current year audit, the most significant things will be communicated to those charged with governance. And out of those things that we have communicated to those charged with governance, we might be communicating some of things to the users to have better understanding for the users. So key audit matters are the matters that we have selected from the matters which we have already communicated to those charged with governance for the users' understanding, specifically for listed companies. When it comes to material uncertainty relating to going concern paragraph, consider that there's an uncertainty relating to going concern. Say, for example, if the client company is not having financial ability to continue, but their parent company have agreed to support them in continuing with the going concern ability, and the parent company will make payouts for the client company in case if they are unable to meet any of the payment requirements. So in that case, the company can be considered to be in going concern, but only till the date on which the parent company extends this support. So once the parent company ceases to provide the support, at that point, the client will become not in going concern. So this is something called uncertainty. And if the client company have appropriately presented and disclosed about the uncertainty in their financials, we can emphasize the same thing in the auditor's report by using material uncertainty relating to going concern paragraph. But you have to keep in mind, only if the company is actually in going concern, their going concern assumption should be correct. There should be an uncertainty about which they have appropriately presented and disclosed in the financial statements. This is an alternative to emphasis of matter paragraph. But MURGC should be used only for the purpose of specifying about matters relating to uncertainty of going concern. And finally, when it comes to...
Sir, may I ask you a question?
Yeah, sure.
In that, only if when the parent company withdraws the this thing only, then only it becomes a going problem in going concern, right?
No, the company will become not in going concern at that point. But even though the parent company extends this support, there's always a possibility that there's an uncertainty relating to the going concern, right? We can assume for the timing that the company is in going concern as the parent company is extending.
Parent is helping out, yeah.
Exactly.
So at that point of time also we have, we have to include that in the MUGRC, right?
Yes, definitely we have to include it within the MUIGC paragraph. Okay. For better understanding, you will just do one thing. Just a moment.
So, but if it is not having a problem, if it is not having a problem, then we don't have to include that paragraph, right?
No, only if there is any uncertainty, we have to disclose it. Okay. See, just go through this paragraph. Requirement, not number 2. It's the actual financials of a company. And it's a disclosure which a company will actually, it's not a sample file, it's actual FS. So you can just go through this file. See, company has accumulated losses of 3.6 million as at that date. Its current liability exceeds the current assets by QR 5.6 million. And this condition indicates there's an material uncertainty which may cast the entity's ability to continue as going concern. Company's ability to continue in operation in the foreseeable future depend upon owner's continued financial support. These financial statements have been prepared under the going concern basis as the owner have resolved to continue the operation and to provide adequate fund for the company to meet the liabilities when they fall due. So they have mentioned that company is in uncertainty relating to going concern, but their operation is assumed to be in going concern as the owner is providing financial support. So they have to disclose it like this. Clear?
Okay, sir. Okay, fine.
Okay. And this is how an auditor's report will look like. And after providing opinion and basis of opinion paragraph, we will include a paragraph like this, which includes material uncertainty relating to going concern. And we will copy paste the same thing which are there in that paragraph to here. Clear? We will draw attention to note number 2 to the financial statements, which indicates blah, blah, blah. We'll mention the same thing here. This is how.
Okay, this is a disclosure. This is a disclosure given.
This is not the disclosure. This will be the material uncertainty relating to going concern paragraph provided by the auditor within the auditor's report. Okay.
Okay, so that one was by the management.
Paragraph.
The first one you showed as going concern, that is relating to which one?
The first one I have shown is the notes to financial statements in the FS.
Okay.
So that is appropriately present and disclosed here. So in that case, auditor can include the MUIGC paragraph within the auditor's report. Clear? After the opinion and basis of opinion paragraph.
Yeah, got it. Thank you.
Then the other one is the other information paragraph. So basically, before considering about the other information paragraph, we need to have a clear picture about other information. So well, we know that other information is the financial and non-financial information that is included within an entity's annual report. So there will be a lot of financial and non-financial information within a company's annual report, right? So all the financial and non-financial information in a company's annual report will be called as other information. And the auditor's responsibility is to check the consistency between the financial statements and other information. Say, for example, if a director's report states that the company's revenues increased by 20%, it is a responsibility of the auditor to check whether 20% increase is there in the financials as well. So it is the responsibility of the auditor to check the consistency between financials and other information. And in case of any inconsistency between both of those, then the auditor may take corrective action. So first of all, if the mistake is within other information, auditor may request the management, those charged with governance and audit committee to correct the mistake. And if none of them corrects the mistake, auditor can reflect the mistake within other information paragraph. Or in addition to which, if the auditor need to mention any related things in relation to the other information, that can be provided under the other information head itself. So this other information paragraph will be specifically be used to mention about matters relating to the other information, which are the financial and non-financial information in an entity's annual report. So these are the explanatory paragraph which need to be provided by the auditor in an auditor's report. But this is purely on the basis of the auditor's judgment. If the auditor need to emphasize about any of this, auditor may provide, or else auditor can avoid. Only in case of other information paragraph, if there is any mistake within the other information, it is mandatory for the auditor to include other information paragraph to reflect that particular issue. But in that case, keep in mind, auditor need to provide other information paragraph immediately after opinion and basis of opinion paragraph. Is that clear, everyone? Clear? Yeah. So these were the basis of the reporting part. And to start with the area of critical appraisal of the auditor's report or any other report, definitely we need to have proper understanding on the reporting formats. Okay. So when it comes to the area of reporting, you should keep one thing in mind. The most importantly, the reporting format of a audit engagement report. So basically, as I have already taught you, when it comes to the auditor's report, the first thing that you have to include is the title and the addressee. Yeah, over here, I'll show you the actual file. So whenever you get an auditor's report, you have to include the title. The title will be always the independent auditor's report. Then you need to include the addressee. So the addressee will be normally the shareholders or owners in case of auditor's report. Okay. And you will be including auditor's opinion. When you include the opinion, you need to provide the client company's name. Then you need to provide the year end or the period. Then you need to mention about the components of the financial statements which you are reviewing. Then you will be expressing your opinion here. And you should never be using any abbreviations. You need to completely provide international financial reporting standards. You need to provide basis of opinion paragraph following the opinion paragraph. And when you provide the basis of opinion paragraph, you have to quantify the mistake, if any. If there is any mistake in the financial statements about which you are providing a modified opinion, then you need to quantify the mistake, which means you need to mention the amount. Plus, if there is any standards misstated, you need to mention the standard name as well. And same as that, here also, you should not use any relevant standard or you should not use any abbreviations. Instead, you need to clearly specify the name of the standards on the basis of which you are performing the audit engagement. And always keep one thing in mind, only in case of a unmodified opinion, you should give opinion and basis of opinion heading. When it comes to a modified opinion, you should always be clearly specifying about the modification, which means if you're providing a qualified opinion, you need to mention qualified opinion and basis for qualified opinion, adverse opinion and basis for adverse opinion, disclaimer of opinion, basis for disclaimer of opinion. Then you have to give the explanatory paragraph here by ensuring that they have met their requirements. Say, for example, if it's emphasis of matter paragraph, you have to make sure that the matter is appropriately emphasized. The matter is appropriately present and disclosed in the financials. Only then you should emphasize about that. Then you need to provide the responsibilities of management and those charged with governance, responsibilities of the auditor. Then you need to clearly mention about if there is any other reporting responsibility that should also be clearly specified. And finally, name of the engagement partner, date and time should be provided by concluding the report. So this is how you will be providing an auditor's report. And for critical appraisal, we have literally studied the same format. First of all, we need to provide the title. Then we need to give the addressee, opinion, basis for opinion, explanatory paragraph, other information, responsibilities of management, auditor, reporting responsibility, name, signature, address, and finally the date should also be provided. And normally you will not be getting complete format of audit engagement. When it comes to your exam, you will be getting only extract of the report. So you're only required to criticize the extract which you will be getting for the exam. So this is how you will be getting questions on critical appraisal. Okay. So basically, when it comes to critical appraisal part, I will just quickly brush through one question and then we will move on to an important question. Okay. So the one we practiced in our regular session as well as in the revision class was a question on ADA group. So we have quickly brushed through the question on ADA group. So they have given us an information over here. So they have mentioned that the company's materiality benchmark is 1.5 million. Okay, they have given us clearly that company's materiality benchmark is 1.5 million. One of the customer owing amounts to company will be going into administration. So there's an uncertainty whether we will be able to recover this 2.5 million. And in addition to which, there's another misstatement of 50,000 in the company's financial statements relating to a legal claim. Both of the mistakes are not adjusted. So when we get a scenario like this, what we can conclude from here? First of all, we will be able to check the materiality. The amount of misstatement is, total amount of misstatement is 2.55 million. And what's the amount of materiality benchmark? It's 1.5 million. So is this amount of misstatement material or not? Is that material?
Material.
Yeah, definitely it's material. Then, is that pervasive?
No.
No, because the company is having a reported profit of 11 million. So if at all we reduce the amount of 2.55 from the amount of profit, will it be restated into losses?
No.
No.
Definitely not. So it's not a pervasive mistake. So it's a mistake which is material but not pervasive. What opinion we need to express over the company's financials?
Qualified.
Qualified opinion. Okay. So the first thing that you need to do when you get a question on critical appraisal is that you need to consider which type of opinion is actually required to be expressed by the auditor. So from this, we have concluded that auditor need to express a qualified opinion. Okay. And the next thing that we need to do, we need to clearly check whether the opinion provided by the auditor is appropriate or not. So what is opinion which is expressed by the auditor in this case? Our audit procedures are proven conclusively run. Trade receivables are materially misstated. Finance Director of Rita Gilmer have refused to make an adjustment to write off a significant trade receivables balance. Therefore, in our opinion, the financial statements of Mark Company are materially misstated. We therefore express a disclaimer of opinion because we do not think that they are fairly presented. So we understood that they have expressed a disclaimer of opinion. Is that the case here? Do we need to express a disclaimer of opinion here?
No.
Right? So disclaimer of opinion is an opinion which is expressed by the auditor only where there is a lack of audit evidence, which is material and pervasive to the financial statements. But that is not the case here. The auditor have already concluded that there's a misstatement of 2.55 million, which is material, but it's not pervasive to the financials. So the auditor shall express a qualified opinion. So this is what you need to provide as answer. So the examiner will be asking you a question like this. Using the information contained in the exhibit, critically appraise the proposed auditor's report. They will ask you to critically appraise the proposed auditor's report. So when you get a question on critical appraisal of the proposed auditor's report, the first thing that you have to ask to the scenario is that whether the opinion expressed by the auditor is appropriate. So we have got the answer to that. No, it's not appropriate. Secondly, you need to consider whether the opinion and basis of opinion heading, is appropriate. Then you have to consider whether there is any unprofessional wording used by the auditor. Then you have to consider whether there is any abbreviations used by the auditor. Then you have to consider whether there is any sort of relevant standard about which the auditor have not mentioned. Then whether there is any kind of vague information provided by the auditor. You have to confirm whether the mistake is quantified. Then you have to consider whether the explanatory paragraph usage is appropriate. So these are the main things which you need to consider while doing a question on critical appraisal. So as you can see over here, Is the opinion and basis of opinion heading appropriate? No, it is not,
No.
right? Because first of all, opinion paragraph have to be expressed by the auditor. Following the opinion paragraph only, basis of opinion paragraph need to be provided. That is not the case here. They have combined both the paragraph together, which is inappropriate. Explain it in your own words. Then, at the same time, you can mention that even the heading is not appropriate because instead of disclaimer of opinion, they have to provide qualified opinion and basis for qualified opinion. Then next, as we mentioned, you have to consider whether there is unprofessional wording. Yes, there is unprofessional wording. They have used the name of the finance director, Rita Gilmer. They have mentioned that we do not think that. So these are all unprofessional wording because it's not on the basis of the thought of the auditor we express an opinion. Instead, it's on the basis of the sufficient appropriate evidence. So unprofessional wording should be avoided, especially a specific person's name should not be used in an auditor's report. Instead, we will be using management as a whole or board as a whole. Here, the auditor have referred to Rita Gilmer, which is also inappropriate. Next, you have to consider whether the usage of any abbreviation. No abbreviations are used here. If the abbreviation like IFRS is used, you can mention that. Then you have to consider, is there any relevant standard name which is not used? Say, for example, there can be chances that the auditor might refer that we have done the audit in accordance with relevant standards. So you are not allowed to do that. Instead, you have to clearly specify the name of standard which you have actually been used for the question. Then vague information. There are chances where the auditor will refer like this. We refer to notes to financial statements, but the note number and the name of the note might not be mentioned. Then there can also be chances that it might be included like this. During the time of acquisition of a subsidiary, but the name of the subsidiary might not be provided. So this is something called vague information. The users will not be getting proper information. So vague information, if there is something, then you can trace it and you can explain it in your own words. Then you have to consider whether the mistake is quantified. As you can see over here in this scenario, the amount of misstatement of 2.55 in notes mentioned in the basis of opinion. So the users will not be able to understand about the mistake. So it should be clearly specified. So you can mention to that. Then you can consider the usage of explanatory paragraph. Here they have used emphasis of matter paragraph to mention about the legal claim of 50,000. Is that appropriate? Definitely not. Because here the 50,000 is a misstatement relating to the provision. And they have not disclosed, and the auditor is disclosing about the same provision within the emphasis of matter paragraph. The first thing is that the amount of materiality was 1.5 and the legal claim is of only 50,000. It's an immaterial thing. Material ആയിട്ടുള്ള കാര്യങ്ങൾ മാത്രമേ കാണിക്കാൻ പാടുള്ളൂ എന്ന് നമ്മൾ പറഞ്ഞിട്ടുണ്ട്. We are only allowed to include only those matters that are material to the financial statements. So if it's not included, then it will be an issue. So it is not appropriate to use emphasis of matter paragraph as it's not a matter which is appropriately present and disclosed in the financial statements. So this is how we will be critically apprising the auditor's report. Is that clear, everyone? Clear?
Yes, sir.
Yeah. All right. So just keep these points in mind. So what are the things we need to consider? We need to consider whether the opinion is appropriate, opinion and basis of opinion is appropriate. Is there any usage of unprofessional wording? Is there any abbreviations that are being used? Relevant standard name is mentioned or not? Then is there any vague information? Is the misstatements quantified? And you have to consider whether the usage of explanatory paragraph is appropriate. Okay?
Sir, I'll one more thing. I'll relevant standards I'll mention ചെയ്തിട്ടില്ലെങ്കിൽ നമ്മൾ അത് മെൻഷൻ ചെയ്യണോ? അത് നമ്മൾ അത് point out ചെയ്താൽ മതി. This was not the relevant standard is not mentioned.
So if you know the name of the standard, you may specifically mention to that standard. If not, you are only required to just mention that the auditor need to clearly state the name of standards instead of referring it as relevant standard. Clear?
Okay.
Yeah.
നമ്മൾ ഫ്രോഡ് ഓഡിറ്റേഴ്സ് റിപ്പോർട്ടിൽ നമ്മൾ ഇൻക്ലൂഡ് ചെയ്യില്ലല്ലോ.
Fraud means if there is any misstatement in relation to the fraud, we will include that.
Okay, immaterial ആണെങ്കിൽ നമ്മൾ അത് തീരെ മെൻഷൻ ചെയ്യില്ല അല്ലേ?
ഇല്ല, ഇപ്പം it's not about the fraud. Let it be anything. If it's immaterial, we will not be mentioning it in the auditor's report. Okay? കാരണം റീസൺ പറഞ്ഞിട്ടാവേ, നമ്മൾ ഒരു ഒപ്പീനിയൻ കൊടുക്കുന്ന സമയത്ത് ഒപ്പീനിയൻ മോഡിഫൈഡ് ആണെങ്കിലാണ് ബേസിസ് ഫോർ മോഡിഫൈഡിൻ്റെ അകത്ത് എന്ത് കാരണം കൊണ്ടാണ് ഈ മോഡിഫിക്കേഷൻ വന്നതെന്ന് പറയുന്നത്. അപ്പോൾ മാത്രമാണ് നമ്മൾ അവിടെ കാണിക്കുക. അപ്പം ഇമ്മെറ്റീരിയൽ ആണെങ്കിൽ നമ്മൾ അൺമോഡിഫൈഡ് ഒപ്പീനിയൻ കൊടുക്കുള്ളൂ. അപ്പം നമ്മൾ എന്ത് ചെയ്യേണ്ട ആവശ്യമില്ല, അവിടെ അതിനെക്കുറിച്ച് പറയേണ്ട ആവശ്യമില്ല. മനസ്സിലായോ? ഓക്കെ
ഓക്കെ, താങ്ക് യു സർ. ഫ്രോഡ് ആക്ച്വലി മെറ്റീരിയൽ ആണെങ്കിൽ എങ്ങനെയാ അത് ഓഡിറ്റേഴ്സ് റിപ്പോർട്ടിൽ എങ്ങനെയാ വരിക?
ഓഡിറ്റേഴ്സ് റിപ്പോർട്ടിനകത്ത് ഇപ്പം ഫ്രോഡ് എന്ന് പറയുന്ന ഒരു സാധനം ഓഡിറ്റേഴ്സ് റിപ്പോർട്ടിനകത്ത് ഡയറക്റ്റ്ലി അല്ല വരിക. ഇപ്പം ആരെങ്കിലും കുറെ കമ്പനിയുടെ ഇൻവെന്ററി എടുത്തുകൊണ്ട് പോയി കഴിയുമ്പോഴത്തേനും അവിടെ ഇൻവെന്ററി ഫ്രോഡ് നടന്നു എന്നുള്ള രീതിയിലല്ല വരിക. ഇൻവെന്ററി ആരെങ്കിലും എടുത്തുകൊണ്ട് പോയി കഴിഞ്ഞാൽ നമ്മൾ എന്ത് ചെയ്യണം? ഡെബിറ്റ് ലോസ് കാണിക്കും, ക്രെഡിറ്റ് ഇൻവെന്ററി കാണിക്കും. ആ എൻട്രി വന്നിട്ടുണ്ടോ എന്ന് നോക്കുക എന്നുള്ളതാണ് ഓഡിറ്ററിന്റെ ഡ്യൂട്ടി. ആ എൻട്രി വന്നിട്ടുണ്ടെങ്കിൽ ഫ്രോഡ് അഡ്ജസ്റ്റഡ് ആണ്, എൻട്രി വന്നിട്ടില്ലേ ഫ്രോഡ് അഡ്ജസ്റ്റഡ് അല്ല. മനസ്സിലായോ?
നമ്മൾ ഫ്രോഡ് എന്നുള്ളൊരു ടേം യൂസ് ചെയ്യാൻ പാടില്ല എന്നുണ്ടോ?
പാടില്ല എന്നല്ല, ആ ടേം യൂസ് ചെയ്യേണ്ട ആവശ്യമില്ല. കാരണം നമ്മൾ ഓഡിറ്ററായി നമ്മൾ ഫ്രോഡ് നോക്കുന്നത് ഫ്രോഡ് ഉണ്ടോ എന്ന് അറിയാനല്ല, അതിന് എന്തെങ്കിലും ഇമ്പാക്ട് എഫ്എസ് ഇവന്നിട്ടുണ്ടോ എന്ന് അറിയാൻ. അപ്പൊ ഇമ്പാക്ട് എഫ്എസ് വന്നിട്ടുണ്ടെങ്കിൽ നമ്മൾ ട്രീറ്റ് ചെയ്യണം, അത്രയേ ഉള്ളൂ.
Okay, thank you.
Yeah. Yes, so let's start with a new question. It's Kilmister. So it's requirement number A. Using the information in the exhibit 1, critically appraise the extract from the draft auditor's report of Kilmister for the year ended 31st March 2015. It's a 10-mark question. You are not required to redraft the extract from the auditor's report. They have told us we are not required to redraft the report. Instead, we are only required to critically appraise the report. Okay. So let's start with the question, guys. So everyone, please do one thing. Please start with this question. It's question number 21, Kilmister in the latest Kaplan revision kit. And it's file number 97. Let's start with this question. So everyone, please start with this question on Kilmister. So let's start with the question. So it is 1st July 2015. You are the manager in the audit department of E&Co, a firm of chartered certified accountants responsible for the audit of several listed clients. The following exhibit available below provide information relevant to the question. K, draft auditor's report. This information should be used to answer the question's requirement in response option provided. So as the requirement, they have got us to critically appraise the auditor's report. So you are currently reviewing the draft auditor's report of Kilmister Company, a listed company specializing in manufacture and installation of soundproof partitions for domestic and industrial building for the year ended 31st March 2015. They have given us the extract of the draft auditor's report here. So it's independent auditor's report to the shareholders and directors of Kilmister Company. We conducted our audit of Kilmister Company in accordance with the international standards on auditing. Our responsibility under those standards are further described in the auditor's responsibilities for the audit of financial statements, selection of our report. We are independent of the company in accordance with ethical requirements which are relevant to the audit of financial statements in jurisdiction in which the company operates. We have fulfilled our ethical responsibility in accordance with these requirements. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. We have audited the financial statements of Kilmister Company, which comprises the financial position as at 31st March 2015, the statement of comprehensive income, statement of changes in equity, and statement of cash flows for the year ended, and notes to the financial statements, including a summary of significant accounting policies. In our opinion, accompanying financial statements present fairly in all material respects the financial position of the company as at 31st March 2015 and of its financial performance and its cash flows for the year ended in accordance with IFRS standards. Material uncertainty relating to going concern. The company is financed by long-term loan from the bankers, which is due for redemption in August 2015. At the date of this auditor's report, company is in process of renegotiating the loan, but has not yet reached a final agreement with its bankers. In our view, the loan finance is essential to continued survival of the company, and that at the time of reporting, therefore, the absence of finalized agreement represents a material uncertainty relating to going concern. The financial statements have been prepared on going concern basis, but do not make any reference to loan redemption or ongoing negotiation with the bank. As the external auditor, therefore, we are fully fulfilling our duty to bring the matter to the attention of users of the financial statements. So this is what they have given us initially with regarding the auditor's report. So let me know what all are the issues here, guys.
Incorrect order of opinion and basis for opinion.
Incorrect order of opinion and basis of opinion. So what should be the actual order?
Opinion, then
Basis of
basis for opinion.
Opinion paragraph should be provided first, and following the opinion paragraph, basis of opinion paragraph should be given. So the order of the paragraph is not appropriate. So you can mention that. So you can just giving a heading, opinion and basis of opinion, and just give the answer like the opinion and basis of opinion paragraph is not appropriately presented. As per standards, opinion paragraph should be provided first, and following the opinion paragraph, basis of opinion paragraph should be provided. Okay, what else?
The addressing
Mr.
addressing the heading.
Addressing the heading. What's wrong with addressing?
It's it should solely address to the shareholders.
Exactly. When it comes to an auditor's report, it should be addressed solely to the shareholders of the company. But instead, they are addressing it to the shareholders as well as to the directors, which is inappropriate. Well, we have studied about the PFI engagements, prospective financial information. Only in case of prospective financial information engagement, we will be addressing it to the directors of the company. So it is inappropriate here. So what else?
We believe that
Sorry?
Unprofessional wording.
Unprofessional wording, sir.
Okay, usage of unprofessional wording. Which all are the unprofessional wordings here?
We believe
In
our opinion.
Okay. In our opinion is okay, because it will be expressed completely from the perspective of the audit firm. So in our opinion is an appropriate term. Okay. Then what else? Is the opinion appropriate here in this question?
No.
Is the opinion appropriate? Huh? Going concern related ആയിട്ട് വരുന്ന material and pervasive ആണ്. What's the actual issue here with regarding the going concern?
If they will not get the loan, then it will be an issue.
Okay. If they do not get the loan, it will be an issue. And is there any confirmation till the date on whether the company will be getting the loan or not?
No.
No. They have clearly specified that at the date of auditor's report, company is in the process of renegotiating the loan, but has not reached a final agreement with the bankers. It's in our view, the loan finance is essential to continue survival of the company that time of reporting. Therefore, absence of finalized agreement represents material uncertainty relating to going concern. The financial statements have been prepared on going concern, but do not make any reference to loan reduction or ongoing negotiations with the bank. As the external auditor, therefore, we are fulfilling our duty by bringing matter to the attention of users of financial statements. So they have mentioned it clearly that the client company have not made any disclosures in their financials in relation to uncertainty relating to going concern, as they do not make any reference to the loan reduction or ongoing negotiations with the bank. The auditor have mentioned that they have fulfilled their duty by bringing it to the attention of users of financial statements by including a emergency paragraph. So, well, in this situation, is the opinion expressed by the auditor appropriate?
No.
No, because there's an uncertainty relating to going concern in the financial statements, about which it is appropriately not disclosed or presented in the financials. So it represents a material mistake in the financial statements. And therefore, what opinion we need to express when there's an uncertainty relating to the going concern, which is not appropriately present and disclosed in the FS? You have to mention that if the uncertainty alone is not mentioned, then in that case, auditor need to consider it as a material mistake, which is not pervasive to the financial statements. So the auditor shall express a qualified opinion. However, if any disclosures in relation to the going concern ability of the company is not appropriately disclosed in the financial statements, it represents a mistake which is both material and pervasive to the financial statement. And in that case, auditor shall express with a
Adverse opinion.
adverse opinion. Okay, that is what you need to provide as the opinion paragraph. Clear?
Yeah.
Yes, sir.
Then, is the usage of material uncertainty relating to going concern paragraph appropriate here?
No.
No. Why?
Disclosure should be.
Yeah, you have to clearly mention that The material uncertainty relating to going concern paragraph should be included by the auditors in the auditor's report only if that matter is appropriately presented and disclosed in the client company's financial statements. However, as the auditor itself confirms that the clients do not make any reference to the loan reduction or ongoing negotiation with the bank, so we cannot treat it as a appropriate disclosure in the financial statements. Therefore, material uncertainty relating to going concern paragraph should not be included in respect of the matter. Clear?
Yeah.
Yeah. What else?
IFRS abbreviations.
They have used abbreviations, right? They have used abbreviations like IFRS standards, which is some inappropriate. They have to refer to international financial reporting standards itself. Good. So you have mentioned that the opinion is inappropriate. You have mentioned that material uncertainties usage is inappropriate. Then you have mentioned about the directors. Then is there anything wrong in this paragraph? Anything wrong? Somebody have mentioned
ethical requirements.
Oh, ethical requirements. What's the issue in that paragraph with regarding ethical requirements?
They haven't specified the name of the.
Does not specify.
Exactly. It does not specify the name of the standard, right? They have mentioned that we are independent of the company in accordance with the ethical requirements which are relevant to the audit. Instead of mentioning which is relevant to the audit, see, basically when it comes to an actual auditor's report, we should specify that we have complied, we are independent of the company in accordance with International Ethical Standard Board of Accountants Code of Ethics for Professional Accountants, IASBA code. It's an actual financial auditor's report. It's an actual auditor's report. This is how we need to disclose it in the auditor's report. And we should not just merely mention it as relevant standards. So it is inappropriate. So you can refer to that. Clear? Yeah. Finally, the company's principal activity is a manufacture and installation of soundproof partitions for domestic and industrial building. The company therefore engages in long-term contracts which are incomplete at the reporting date and which are material to its revenue figure. The installation process is complex and significant judgment is applied in assessing the percentage of completeness, which is applied to calculate the revenue for the year. The significance of this judgment requires us to disclose the issue as other information which is relevant to the users of financial statements. So they have mentioned that company's principal activity is the manufacture and installation of soundproof partitions, and companies having long-term contracts which is still incomplete at the reporting date. The installation process is complex, therefore it's difficult to assess the percentage of completeness. Therefore, this significant judgment have to be disclosed to the users, for which the auditor have used other information paragraph. Is it appropriate to use other information paragraph here in this case?
No.
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 Definitely the auditor cannot use other information paragraph. Why?
Should be used in the.
What's the purpose of other information paragraph?
Consistency of audit annual report.
Exactly. It's very important, right? We have actually learned it just before. Other information paragraph is a paragraph used by the auditor specifically for mentioning about matters relating to other information, which means matters relating to financial and non-financial information disclosed in an auditor's report. So is that annual report? Is that a matter that is mentioned in the annual report here? No, it's nothing relating to the annual report. It's all about a significant judgment about which they have already communicated to company's officials, which means probably to those charged with governance. So in case if an auditor have communicated about significant matters to those charged with governance of a company, and if the auditor wants to disclose the same thing for the understanding of the users, which should be this paragraph that it should be used specifically for this purpose?
Key audit matters.
Key audit matter paragraph. But before that, you have to consider whether it's a listed client or not. Is that a listed client?
Listed. It's a listed client.
It's a
listed client.
So therefore, definitely you can use a key audit matter paragraph in order to specify about the important things that you need to communicate to users. And it should not be mentioned within other information paragraph. Is that clear?
Okay.
Yeah.
So can you please repeat what things are clearly, means what we have to include in the other information paragraph? I get confused in that.
Okay. Just
Hello?
a moment. Yeah.
What
got
should
it.
be there in the other? Sir, can you please repeat what? Yeah.
Yeah. Got it. Just a moment. See, this is how an annual report of a actual entity will look like. Okay, this one is Tata Motors annual report. Okay. See, and within the annual report, the company will be providing financial informations like the revenue, same as that earnings before interest, tax, depreciation, and amortization figure. There will be non-financial figures like sales volume, then the amount of CO2 and other emissions. Then they will be including within the annual report about many sort of financial data. Like, see, over here, they will be mentioning about the unit of sales, the amount of revenue generated from each of the segments. All this sort of data will be included within an annual report. It is the responsibility of the auditor to cross-check the financial statements with that of the annual report. And the auditor need to check the consistency between financials and annual report. And if the auditor wants to mention about any things in relation to a company's annual report, that should be within the other information paragraph. Or if there is any inconsistency between financials and other information, consider that in the company's financial statements, within the segmental information, the audit company have included segmental revenue of 40,000. And in the annual report, they have included it as 50,381. So there's approximately around 10,000 crores ka difference. So in that case, it can either be due to the mistake in other information or maybe due to the mistake in company's financial statements. If the mistake is due to mistake in other information, then in that case also auditor will be including that within the other information paragraph. So likewise, if the auditor have to refer to any matters that is included within a company's annual report or its financial or non-financial data, about all this, auditor have to emphasize within the other information paragraph. Is that clear?
Yes, sir. Thank you.
All right. So that was one of the most important thing that we need to discuss about the critical appraisal. There is very high chance of getting a question from the area of critical appraisal. And well, we have actually got a critical appraisal of the PFI engagements as well. Well, it's very important to learn the format for the PFI because these have been asked in multiple exams, direct question. So it's as per ISA 3400, you have to have clear understanding about the prospective financial information reporting format. Well, we know that when it comes to prospective financial information, it's the budget and forecast, which means if a company have created a forecasted financial statements for the next 5 years, auditor will be performing a review of that and will be providing a report for PFI. And in the PFI engagements report, first of all, auditor should include title and addressee. Ensure that the title will be, the addressee will be always the board of directors of the company, because the budgets and forecasts will be prepared for the board of directors. So we will be providing report to the board. Then identification of the subject matter, which means the name of the client, period, and the elements should be mentioned. Then name of the applicable law and standard should be provided. Then same as that, management's responsibility should be given. Auditor's responsibility should be given. The purpose and restricted distribution of the report should also be provided. Then we should always be providing negative assurance. Then the PFI will be properly be prepared on the basis of assumptions. Then we need to consider achievability and provide caveat, which means we need to include a statement. The actual results might vary from that of the forecasted figures, as the forecast is based on assumptions. On the basis of changes in the market conditions, the final value might also vary. You may include a statement like that. That's something called caveat. Then accountant signature and address, as well as the date of report, have to be provided. So this will be the reporting format of a PFI engagement. Everyone, please do one thing. There's a question in your revision kit. Well, it's not the latest revision kit. In the old revision kit, there's a question called Rocket. And under the question rocket, there's requirement number C. And in the requirement number C, you have got a full-fledged question on PFI engagements. They have asked us to critically appraise a proposed assurance report of Tulip Company. So this is actually a PFI report, and you've got a full-fledged PFI report. So when it comes to PFI reports, you have to do one thing. You have to compare the reporting format of the PFI engagements, the one we learned here, with out of the question. In addition to which, we have studied some set of points, right? I mean, the points in relation to the critical appraisal. This should also be cross-checked. So you have to consider these points. In addition to which, you should also be considering these points while critically appraising the PFI engagements. Is that clear, everyone? Okay. So make sure that everyone is going through this question, which is one of the most important questions, and you will be getting a full-fledged idea on how the PFI engagements will be appearing, because you will be able to get to know that how much mistake can be there in a question to the max, because anyway, you may go through this question. We have practiced this question during the revision as well as in the regular session. So please do practice this question one more time, because we have not got any other questions based on PFI engagements. Okay. All right. So that's all about the area of critical appraisal. So please make sure that you've got a clear picture about this. Please consider these benchmarks and kindly try to read the scenario and match the scenario to these benchmarks. Okay. Then, when it comes to our exam, definitely you can expect a question from the reporting part. One of the 25 marks question will be based on reporting. And this will be matters and reporting question. And within the matters also, well, we have got different categories of questions. You might be getting a question on matters to be considered and discussion with the management. You might be getting a question on matters to be considered and audit evidence, further actions, further procedure. These are the basic categories of questions that will appear from the area of matters to be considered part. So first of all, let's start with the area of matters and further action. So when you get a question on matters and further action, the examiner will be asking you to evaluate the matter, and they will ask you to, just a moment, I'll show you the question for better understanding. So you'll be getting a question like this. Comment upon the matters described above. Explain the further actions necessary before auditor's report can be signed. So when you get a question on matters to be considered or comment upon the matters, first of all, you have to comment on a matter. So when you need to comment on a matter, first of all, you have to mention whether that particular matter is material or not. Secondly, you have to clearly provide the accounting treatment that is actually required in that case. Third, you have to clearly specify what went wrong in that case. So what is the amount of misstatement there? And in some cases, what can also go wrong can be mentioned, which means risk can be mentioned. And finally, you need to show the impact on financial statements, which is nothing but it's almost similar to the format of audit risk itself. But when you consider the materiality, here also you are required to consider only the lower limit of materiality. You are not required to consider the upper limit. So you have to clearly specify the matter is material or not. Then you have to specify whether the accounting treatment is appropriate and what's the actual accounting treatment required. Then you have to specify what went wrong in the scenario. And finally, you have to show the impact on the company's financial statements. Then consider that this question. This rocket company is a listed client, and well, they have signed a contract with some of their customers. And as per the contract, they have delivered the goods to the customer. They have not delivered the goods to the customer warehouse. They have delivered goods to a third party who have agreed to store them until the customer were ready to receive the goods. But when they have signed the contract with the customers, they have got a provision there that the goods have to be directly delivered to the customer warehouse. and the goods have to be inspected by the customers, but the company have delivered it to a third-party warehouse, and the audit team, client company claims that they have satisfied the contractual obligation. Therefore, they have treated the revenue of 17 million. So this is what it's mentioned in the scenario. So first of all, you have to calculate whether that amount of mistake is material or not. So you have to calculate whether the amount of 17 million is material, and you have to specify whether it's material or not. Then you have to specify the accounting treatment. What's the actual accounting treatment required there? You have to give that. And then you have to specify what went wrong along with the scenario. Only if the scenario is specified, you will be getting marks. Finally, you have to show the impact over the company's financial statements. So starting with the answer, you will be providing answer like this. The amount of revenue received from the sales transaction is 17 million, and it amounts to dash percentage of profit and dash percentage of total asset, and it's material. As per IFRS 15 revenue from contracts with the customers, revenue should be recognized only when the performance obligations are satisfied. Till the date, revenue should be kept as deferred income and should not be recognized as revenue. During the year, the company signed contract with 2 of their customers, whereby they have agreed to the customers that they will deliver the goods to customer warehouse, and the final inspection of the goods have to be undertaken by the customers. However, none of these contract terms have been satisfied by a Rocket company. They have delivered the goods to the same location, that is to a third-party warehouse, who have agreed to store them until the customers were ready to receive the goods. And the inspection of the goods have not been undertaken by the customers. Therefore, there are pending performance obligation, due to which the revenue have to be recognized as deferred income. But the client company claims that they have fulfilled its contractual obligation to provide goods by a specified date, and the revenue attributable to sales transaction of 17 million has been recognized, resulting in overstated revenue and understated deferred income. This will be the answer that you need to express. Clear? Is it clear, everyone? Hello, is it clear?
Yes.
So this is what you will be, this is how you will be commenting on the matter. Then you have to explain the further actions necessary before the auditor's report can be signed. So to mention about the further actions, to mention about further actions, first of all, you have to include what you need to discuss with the management. Secondly, if the management is not willing to correct the mistake, what do you need to discuss with those charged with governance? Thirdly, if those charged with governance is not willing to correct the mistake, what will be the impact over auditor's report that you need to communicate with those charged with governance? If they are still willing to uncorrect the misstatement, obtain written representation from those charged with governance. And finally, reflect in auditor's report. This will be the further actions. But when you write the further actions, these are the brief points, you have to elaborate it. Give the heading further action, then you give the first further action. The auditor should discuss the matter with the client company's management, and the auditor should inform them that, I will rephrase it again. The auditor should discuss with the Rocket company's management about the amount of misstatement of 17 million relating to 2 sales transactions, and the auditor should request them to correct the misstatement by removing the amount of 17 million from the company's revenue and including the same amount as part of the company's deferred income. And if the management is unwilling to correct the misstatement, auditor should communicate the same to those charged with governance. And auditor should request the same from those charged with governance to correct the misstatement. But if they wish to continue without amending the financials, auditors should inform them about the impact that will be created over the auditor's report if the matters remains uncorrected. But if they still wish to continue, then the auditor should obtain written representation from them, stating their intention to continue with the financials without amending them. finally, the auditor need to reflect the matter over the auditor's report. So this is how you will be stating the further actions. So when you provide the further actions, you need to clearly define what you need to communicate with the management rather than just specifying the term that you have to communicate with management. You have to clearly specify what you have to communicate with the management, what you have to discuss with those charged with governance. So this have to be clearly specified, and to get a proper knowledge about this, you have to go through this. Clear?
Yes, sir.
Yeah. Then, in addition to this, they have also asked us for implication for the auditor's report if no adjustment are made to the financial statements. And if implication over the auditor's report is asked, then in that case, we need to give the heading auditor's report. And under the auditor's report heading, first of all, you have to specify again whether this matter is material. Secondly, you have to specify whether this matter is pervasive. Then you have to specify what will be the opinion that the auditor need to express in the financial statements. And finally, you need to specify the basis of opinion which need to be provided. Okay. Consider that this mistake is material. Is this mistake pervasive to the company's financials? No.
No.
Because company is having a profit of 139 million and the total amount of revenue is only 17 million. So if at all we reduce the amount of 17 million from the amount of company's profit, still the company will be in profit. So it's not a pervasive mistake. So you can mention that if the matters in relation to 17 million revenue recognized by the rocket company is uncorrected, it will be material to the company's financial statements. However, this cannot be considered as pervasive, as if the 17 million misstatement is adjusted within the company's profit, the profit will still remain the same and will not be restated into losses. Therefore, it's a mistake which is material to the company's financial statements, that is not pervasive. So the auditor shall provide a qualified opinion stating that except for the matters identified, the rest of the financial statement shows a true and fair view. The auditor should also include a basis of qualified opinion following the opinion paragraph, which should clearly state the reasons for providing qualified opinion and to express the misstatements in relation to the revenue recognition of rocket company. So this is how you will be giving impact over auditor's report. Is that clear, everyone?
Yes, sir.
Yes, sir.
Yeah. And consider that instead of asking the impact over auditor's report, you are getting a question on impact on auditor's opinion. In that case, you are not required to include the basis for opinion paragraph. Instead, you are only required to include till opinion paragraph. Clear? So you are only required to provide the answer till here. Is that clear, everyone?
Yes, sir.
Perfect. So this is how you will be getting question on matters to be considered and further actions. So first of all, while writing the matters, you have to clearly include the materiality. You have to specify the accounting treatment, what went wrong and impact on FS. When you provide further actions, you have to discuss what you have to discuss with the management. With those charged with governance, you need to obtain written representation and reflect in auditor's report. When it comes to auditor's report, you have to clearly specify material or not, pervasiveness, opinion, and basis of opinion. Okay? Perfect. Then, moving on. See, there can also be chances of having a question from the areas matters to be considered and discussion with the management. So when it comes to the matters to be considered and discussion with the management, you might be getting a scenario like this and the requirement. Explain the matter which should be discussed with the management in relation to each of the uncorrected mistake. Assuming management does not adjust misstatement identified, evaluate effect of each on audit opinion. So I've already told you, if you're getting a question on auditor's opinion, you are only required to include whether matter is material, pervasive, and the opinion paragraph. Basis of opinion should not be provided there. When the examiner asks you to explain the matters which you need to discuss with the management, it is similar to the one we learned now. The only difference is that when you get a question on matters to be considered and discussion with the management, you can follow the same format for matters to be considered and further action, but it's a bit confined area. You're only required to include what you need to discuss with management. So after including materiality, accounting treatment, what went wrong, and impact on FS. You're only required to include what you need to discuss with the management. The rest of the things in the further action shall not be provided. So that's the only difference between further action and discussion with the management. And as we mentioned earlier, since it's a question on opinion, you have to include material or not, pervasiveness, and opinion. You shall not include the basis of opinion. So it will give proper answer for matters to be considered and discussion with the management. Is that clear? Is that clear, everyone?
Yes, sir.
Yes, sir.
Okay. Saying, and in this requirement, as you can see over here, assuming that the management does not adjust the misstatements identified. Here we have got two set of mistake. One in relation to the basking company's related party transaction, and the other one in relation to a provision or allowance. There are two mistakes. Assuming the management does not adjust the misstatements identified, evaluate the effect of each on audit opinion. They have asked us to evaluate the effect of each on audit opinion. So when we get a requirement like this, what you need to do is like, first of all, you need to pick the scenario number one. You have to give the heading related party transactions. Then you include the matters part first, then discussion with the management part, then impact over auditor's opinion. Then you have to select the second one, that is the provision related one. Then you have to include the matters part, discussion with the management part, then the audit opinion. So this is how you need to give the answer when they ask for individual impact on audit opinion. But there's another question in the revision kit which I have written called Boston. Here they have asked us that explain the matters which should be discussed with the management in relation to each of the uncorrected misstatement. Same scenario. Assuming that the management does not adjust any of the misstatements, discuss the effect on audit opinion and audit report. Assuming the management does not adjust any mistake. So here they have given us three mistakes. One in relation to impairment, other one in relation to borrowing costs, and other one in relation to investment. And they have not asked us individual impact. Instead, they have asked us what will be the impact if none of this mistake is uncorrected. So in that case, what you need to do is that you have to, first of all, select impairment, write the matters part and discussion with the management part. Next, borrowing costs, matters, discussion with the management. Investment, matters, discussion with the management. And after that, give a separate heading called reporting. And under the reporting head, you have to take the total of this misstatement and you have to consider whether this total of the misstatement is material, whether the total of the misstatement is pervasive, and then you need to show which opinion you shall express over the company's financial statements. Is that clear, everyone? Okay. And when you get scenarios like this, always keep this one in mind. Most importantly, these are debit and credit balances. So when you take the cumulative amount of debit and credit balances, it will be a netted amount. So you should not take the total as 6,18,500. Instead, you have to take the difference of these amounts because one is debit, which is a positive balance. Another one is credit, which is a negative balance. So when we take the total of the debit and credit together, it will be a netted amount. Is that clear?
Yes, sir.
Yeah. So that's all about matters to be considered and discussion with the management, matters to be considered, further actions. Then you might be getting questions on matters to be considered and further procedure. So basically, when you get matters to be considered and further procedure, you have to keep one thing in mind. It is nothing but you have to give the normal matters. You have to write materiality, accounting treatment, what went wrong, and impact. And then you have to write the audit procedures required. That's matters to be considered further procedure. You have to keep in mind further procedure and further action is entirely different. Further action is the step-by-step requirement. Further procedure is nothing but audit procedures that need to be performed by the auditor. Clear? So as we learned in the last day, you have to clearly think about which procedure you will be able to perform in each of the cases. What you can discuss with the management or inquire with the management, about what you can obtain written representation from the client company, about what you can obtain external confirmation, how you can review the correspondence between the parties. Is there anything specifically which you can recalculate or reperform? What's the analytical procedures you can perform there? Is there any breakdown of expenses which you can obtain? Is there any board minutes that you can review? Or is there anything that you can obtain and confirm to the supporting document? Is there any notes that you can review? So these are the things that you have to consider as we learned in the last day. So you will be providing a procedure. The name of the document or information have to be provided, and the purpose should also be clearly specified. Is that clear, everyone?
Yes, sir.
Yeah. All right. Then, see. So that's very common, okay? There are some situations where you might be getting a scenario like this. It's a very common scenario, and you will be getting requirement like this. Comment on the matters to be considered and explain the audit evidence you should expect to find during the review of the audit working papers in respect of each of the issues described above. So they will ask you to explain the audit evidence that you can find during the review of audit working papers. So instead of asking you the procedures to be performed by the auditor, they will be asking you to explain the audit evidence that is actually required to be provided. Sorry, that can actually be found by the auditor during the time of the review of working papers. So literally they are asking you for audit evidence you can find if you are going for the review of the audit. So consider that somebody have already performed an audit procedure for the client company by which they have obtained audit evidences. And now the examiner requires you to mention about the audit evidence which you can expect to find there. So the only thing that you can do here is that, first of all, you have to think about the actual procedures that need to be performed by the auditor. So you have to think properly about the procedures that an auditor need to perform in case if he is performing the audit procedure. Then you have to think from the past that somebody have already done the procedures and obtained the evidences. So you're only required to convert the procedure to evidences. So for which you're not required to include the procedure part. So because the procedure is already there, right? So you're only required to include whatever be the document or information is required. You may mention that. And the purpose of document or information have to be provided there. So say, for example, you should not mention to discuss or inquire with the management. So instead of that, you can write as notes of discussion with the management. Notes of discussion with the management about dash. Obtain written representation. A written representation will be there as audit evidence. Obtain external confirmation. An external confirmation will be there as an audit evidence. A review of correspondence will be done by the auditor. There will be a recalculation performed by the auditor. So there will be a recalculation sheet, right? Or recalculation schedule. You can use the term schedule. Then you are not required to perform analytical procedure. However, there will be an analytical procedure which is already being carried out by another auditor. There will be a breakdown of expense. There will be a review of the bond minutes. There will be an agreement of dash documents to the supporting documents. There will be a review of the notes to financial statements. So in this perspective, you can change the procedures to audit evidences. So the procedures is the something that you are planning to perform for the time being. However, on the other hand, audit evidence is something which is already obtained by an auditor. So you are only required to include the document name or the information which is actually required. Plus, you are only required to clearly specify the purpose for which you are performing this procedure. So this is how you will be providing the audit evidence. So you have to clearly include the document or information, and the purpose for which it is held in the working paper should also be clearly specified. So this is how you will be providing answer for matters to be considered and audit evidence, whereby you have to clearly define the matters part, and following the matters part, you have to give the document or information plus purpose. Is that clear, everyone?
Yes, sir.
Okay, so this is how you will be presenting the answers for matters to be considered and audit evidence. So we have quickly gone through the area of matters to be considered and further actions, matters to be concerned discussion with the management, matters to be concerned further procedure, and matters to be concerned audit evidence. when it comes to matters to be considered in discussion with the management, as we discussed earlier, we have to clearly specify about the matters on which we are having a clear understanding. So we will be first of all providing matters, then we will be providing the further actions need to be performed by the auditor, and then giving the reporting part when it comes to the area of matters to be considered and further action. In case of matters to be considered in discussion with the management, it's a confined area where we are only required to consider what we need to discuss with the management. When it comes to further procedures, it's nothing but the audit procedures which need to be performed by the auditor. But when it comes to audit evidence, we will be including the document or information that is required and the purpose for which the information is actually held with the company. Sorry, held with the auditor in the auditor's report or in the working paper. That is what we need to mention there. Is that clear, everyone, Paka?
Yes, sir.
Okay.
Yes,
So
sir.
this will be one of the short question from the area of reporting part. So everyone should be practicing maximum number of questions from this area. And before starting with this areas question practice, make sure that you are having a clear picture on the accounting treatments that are actually required. Because accounting treatment is very important in this area, because accounting treatment will be the one and only thing that will be a challenging part while writing the matters to be considered area. When it comes to further actions, discussion with the management, then audit procedures and all, it will be purely based on the way in which you practice maximum number of questions. Well, we have got only a very limited number of questions when it comes to the area of matters and further actions, matters and further procedures and all. But do try to practice maximum questions from the other areas, especially from the area of matters to be considered audit evidence. Okay. Yeah. So let's continue. And now we're going to start with the area of matters to be considered and discussion. Sorry, matters to be considered before accepting an engagement. See, well, we have got some important question from the area of matters to be considered and discussion with the management, further action, further procedure, audit evidence, and all this. At the same time, one of the important questions which will be asked as part of the third 25-mark question will be from the area of matters to be considered before accepting an engagement. And there is also something called matters to be considered before agreeing the terms of an engagement. So both are entirely different. So when it comes to matters to be considered before accepting an audit engagement, well, these are the factors which we need to consider before accepting an engagement. So, well, there will be the resources, then there will be something in relation to the risk, fees, professional competence, reputation of the client, preconditions for an audit, professional clearance, independence and objectivity, management integrity, money laundering, and all these factors. So the examiner will give you a scenario. Say, for example, there are questions like Dragon, where the examiner have clearly asked us to consider the matter before accepting an audit engagement. So when you get a question on matters to be considered before accepting an audit engagement, you should not just merely refer to each of these matters. Instead, you have to read the scenario properly and you have to check whether any of these factors is mentioned in the scenario. Only then you should talk about these factors. Consider that if there is anything that affects the resource availability for the engagement, say, for example, if the client needs to complete the audit within a span of 3 months, you have to consider whether you have got resources for that in terms of time as well as in terms of staff. If there is only adequate amount of resources, you should be accepting that engagement. You have to consider whether the risk of the engagement is acceptable. Say, for example, you have to consider whether the client is having multiple audit clients. The client is having multiple countries cooperation, which gives rise to high risk of currency related problems, or is there multiple subsidiary companies for the client company? If there is any uncorrected mistakes from the prior year audit, which gives rise to risk, if there is significant risk which is beyond your limit or beyond the amount which you can prefer to take, then in that case, you should not accept the engagement. You have to consider the fees for the engagement, which is acceptable or not. You should be considering whether the fees is adequately enough for you to recover the expenses incurred for the audit. Then you have to consider whether you are professionally competent to undertake this engagement, especially if the client is listed in multiple country stock market. You have to have proper knowledge about the listing requirements. Then only you will be able to perform the engagement for the client company. So you have to consider whether you are professionally competent. You have to consider the reputation of the client, whether the reputation of the client will be is affected. Say, for example, if the client is involved in any sort of litigation or issues, then automatically the audit firm's reputation will also be affected. To consider that. Preconditions for the audit and professional clearance should be used specifically for the audit engagement. Professional clearance means communication with the prior year auditor. So we need to know why the prior year auditor have declined the engagement or resigned from the engagement. If it is due to any financial reporting related matters, then we cannot continue with the engagement. We have to consider whether there is any factors that affects the independence and objectivity of the auditor, or if there is any factor that might be affecting the management's integrity, or is there any factors which create money laundering issues. All of these factors have to be considered before accepting an audit engagement. And in addition to these factors, consider that if you're getting a question on prospective financial information, if you're getting a question on matters to be considered before accepting a PFI engagements, then in that case, you have to consider whether the intended use of information, what's the intended use of information? Is that appropriate for you? You have to consider whether the information is for any general or limited distribution. You have to consider whether the nature of assumptions are reasonable. Then you have to consider the elements of information included, whether it is just the forecasted cash flow or forecasted statement of financial position or the forecasted statement of profit or loss. You have to consider that. You have to consider the period covered by the report. If the period covered by the report is too much, then that will not be reasonable. So you have to consider the period covered by the report. So these have to be considered before accepting a PFI engagement or the engagement on prospective financial information, which are budgets and forecast. Then, so this can be a question on matters to be considered before accepting an engagement in case of PFI and all. Say, for example, there's a question in the revision code like voters. So the voters company's question is a question on PFI engagement. So they have asked to evaluate the matter to be considered by Hunt and Co. before accepting the engagement to review and report on voters company's PFI. So you have to consider the PFI related matters. So this will be a sort of question. Or all on the other hand, there can also be chances of having a question which is based on matters to be considered before agreeing the terms of an engagement. So if it is a question on matters to be considered before agreeing the terms of an engagement, in that case, the answer will be entirely different. Say, for example, there's a question called Hawk in the old revision kit. They have asked us to identify and explain matters that should consider in agreeing the terms of the engagement. So when you get a question on matters to be considered before agreeing the terms of an engagement, well, we know that the terms on engagement will be included within the engagement letter. So the engagement letter will consist of the terms and conditions of the engagement. So if you get a question on matters to be considered before agreeing the terms of an engagement, then you should be referring to the content of an engagement letter. Okay, you have to refer to the content of an engagement letter. So what will be the content of an engagement letter? It will consist of the objectives and scope of the engagement. Then it will refer to objectives of the auditor. Then it will be clearly specifying the responsibilities of the management. Applicable financial reporting framework will be referred, and reference to expected form and content of the report will also be clearly specified. So you have to refer to these matters before agreeing to the terms of an engagement. So you should not be referring to the matters we discussed earlier. You should not be referring to any of those matters. Instead, you should clearly be focusing on these factors before agreeing to the terms of an engagement. However, on the other hand, if it's a question on matters to be considered before agreeing an engagement, that too relating to PFI, in that case, you have to include these factors. And in addition to these factors, you have to include the points which we just learned in relation to the PFI as well. So that PFI related points plus engagement letters content should be provided before agreeing to the matters of a PFI engagement. Is that clear, everyone?
Yes, sir.
Okay. So everyone, please do practice the question in relation to the matters to be considered before accepting the engagement today itself. That's a question from the area of Hoke. And please do ensure that you practice the question matters to be considered before agreeing the terms of an engagement from the old revision kit as well. Okay. And in addition to which, please do try to revise the whole area of accounting standards as early as possible. And please make sure that you have got a clear picture about all the accounting standards. Okay. Yeah. So this is what we have got to revise quickly today. And we have also practiced a very new question from the area of critical appraisal. So please do practice the same question and do ensure that you're revising the area of accounting standards as well. Okay. All right. So that's it, guys. That's for the day. Thank you.